So you've decided that you would like to invest in a property. So I'm using what might be a low number for some people. It might be a high number for some people. It's an estimate. So bear with me and play along just for the estimated numbers and know that I can supply you with whatever variation you would like. So we have a purchase price of $200,000. And let's say you're going to do an investment. And maybe for this investment, you're looking for what your return might be. And their estimates can't give you an exact because I don't know your exact numbers and I don't know the exact terms. I can get a closely accurate number if you provide me what the purchase price and the monthly, or if we're looking for a property, then the way that we make a decision on the investment that you're going to make is I pull these numbers and I provide these to you. I've had great feedback from many investors that I've worked with. They really love this. They love the fact that they have an idea of what their rent would be. They know that there's variations, and we can change the holding time as well. So let's go through this. $200,000 is a purchase price. Let's say your down payment on an investment property is 20%. And let's say that your interest rate is at 4.5. Now these are all variables that the mortgage company would give us if you are doing a mortgage on the property. See, as I've got here, use a loan, yes. We have the option of not using a loan. I have many people that purchase with cash. And that changes our numbers and that changes the amount of return. So there is definitely a difference when you're using cash. But let's just, for these purposes and just for this estimate, let's say that yes, you have a loan. 20% is your down payment, interest rate of 4.5%, and a loan for 30 years. And you may choose to do a loan for 15 years. And then your closing costs may be different depending on what county, depending on what time of year. There are many factors, but we need to use something for an estimate. And we're going to say for this property that you don't need repairs. Now, many investors would know by watching this video that many properties, yes, do need repairs. I don't want to get into too much of that without speaking to you personally or without looking at the property or without us discussing or understanding a bit more. So when we find a property that you're looking at, or let's say you're an investor and you're getting ready to sell the property. I just did this for an investor who is selling her property, and I'm making available to any other agents that might want to cooperate, as well as any buyers, this sort of document that gives them some idea. So if they want to have the renter in the property, do they want to increase the rent? Do they want to make repairs to the property? What are their numbers going to look like at the end? And as I've said in some other videos, numbers were not my favorite when I started in real estate. I love people and I am passionate about real estate, every aspect of real estate, whether it's buying, selling, renting, investing. I love helping people through their real estate transactions. So numbers weren't my favorite. What I learned is that numbers became so important. And that's how many people over the years have been able to make an educated decision by my supplying them numbers. So let's go back to the monthly rent. On this one, I used an estimate of $1,400. Now this depends on the square footage of the property. There's, again, many factors. We're only doing this for an estimate so that you can get an idea. So it's a $200,000 property. We're doing $1,400 as the monthly rent. Annual increase. If you're managing your own property, you may determine what your annual increase is. And that's going to be up to you, and we can discuss that further. If you have any other monthly income that may be coming in, and then a vacancy rate of 5%, meaning that if the property happens to be vacant for 5% of the time, at least you have an idea and you can set that number aside. So this refers to, let's say the property is vacant for 1 month while you're looking for a tenant. Or let's say you have multiple properties, maybe a duplex, and one side you paid $200 and maybe the other side you paid a different price for. Maybe one rents for $1,400 and the other one rents for $1,800, $2,000, $3,000. There are so many numbers we can plug into here. But just as an easy number, because I did this for a client the other day, we used 200,000. And I thought that was a pretty good number to start with to give you an idea. Let's go into property tax. This is probably low, maybe not low. It depends on your property. So $2,000. And total insurance on the property at about $1,500. Now, if you were in some other parts of the country, these numbers might be very different for you. This might be much lower. It could also be much higher. So depending on your area, this may change. And then we're adding in for a potential increase on each of these. Maintenance. Set aside $100 a month for maintenance on a property like this. You may want to set aside more. Let's say maybe you know there's not repairs right now, but maybe in the future there are. So we can make this a variable number as well and change that. And then the appreciation. We're using a 3% appreciation on the property and holding it for 10 years. So let's say you have this investment of $200,000, $1,400 a month in rent, a 3% annual appreciation, and then 10 years of holding. Again, these are all estimates. Let's say at the end of it, your cost to sell the property is 8%. Well, where does that put you? Here's where it puts you. And this is where the picture comes in very handy of your numbers. Your return is approximately 14.31% per year. The total profit when you sold the property after that 10-year time frame would be $102,778.47. Your cash on cash return was $239, and your capitalization rate is 5.41%. Now, what does all this mean? Well, we can get into that, and I can have those discussions with you. But just for the beginning of the numbers, let's move over here for a moment. Your income per month was $1,400. That was the rental amount. The amount you paid for the mortgage, and this is an estimate, your mortgage company will let you know exactly, but we were using an estimate of $810.70 at a vacancy rate of $70 per month. That's annual of $840. Now, if you're going to be vacant for a month and you're doing an annual lease, you would want to put a higher number in here so that you cover at least 1 month, or maybe you want to cover 2 months. It's up to you on how you want these numbers, and I can work with you to make the numbers, to add the numbers in that might be more accurate for your market. The property tax, approximately again, $166, and the total insurance, your HOA fee as broken down. Now, this number is not going to be accurate. I can tell you right now by looking at this that this is probably $250 per month, not an annual fee. So that's going to change these types of numbers. But we do have some associations that have a very low HOA fee, or they have no HOA fee at all. Contact me, let me know. We can put in a $250 a month here, $300 a month here, whatever that number might be. And then your maintenance costs at $100 per month, that's that money that you're putting aside. And then your other cost of $1,667, giving you a cash flow of $90.14. Net operating income, $900. Now, I would go back on this particular one and I would change this HOA fee to $250. Leaving it at $20 to me is not an accurate number. That's not going to give me an accurate number. And it wouldn't, if I'm investing in this property, this for me would be too low. Because I typically, well, I mean, it depends. And this goes back to, and these are decisions you get to make when you're looking at investment property. Are you buying in a homeowners association? If you're not buying in an association where there's a homeowners fee, then this might end up being $0. Which means now that instead of $90, you're getting $110. So this is a variation. This is really only to give you the estimate and let you know that we can pull these numbers and give you some idea. So just based on what we have here, I would say your total expenses, we get back over, your total rental income over that 10 years, $182,000. Your total mortgage payments were $97,000. If you calculate out your expenses based on the percentages that we used for increase, it's 59. So your total net operating income was 123. The total profit on this property, 102,778. That's if you hold the property for the 10 years. There's other ways that we can go in and change this to a 5-year, a 7-year, and depending on the number of years, actually come up with what the number would end up being. So I share this with you so that you know that there are ways that I can check an investment property for you numerically, just giving you an idea of what your return on this investment would be if you choose to rent it. The other factors come in whether this is going to be, and maybe it's not even a monthly rental. Maybe it's a 2-year, there's so many factors that could be added. And it just depends on what you're looking for. So that's why we do a needs and wants analysis, even in your investment, so that we have an understanding of what it is that you're looking for. So have a happy day. Subscribe below right here. Hit that red button down on the bottom. I know it's not right on the screen, but hit that subscribe button so that you can get other updates as we go through. And then if you have any questions, you can comment, you can look below, and you have all of the contact information right below on this video. Send me a text, give me a call, or email, whatever it might be. And then we can take a look at a property. Or if you'd like to, we'll do that needs and wants assessment and figure out what kind of numbers that you're looking for, what kind of return that you might be looking for. And then we find the property based on the numbers that you're looking for, based on the return that you want. So give me a shout back, comment, send me a text, an email, or give me a call. Have a wonderful day.